Ravi, good having you. Thanks so much for joining in.
Thank you very much.
Let me start off with maybe that one or two small concerns that people would have, because otherwise it seems to be an okay quarter. Your dollar revenues have declined 3.3% odd sequentially, sharp fall from Intelligent Transport Solution and the top client as well. If we exclude these two, then they have been okay. Fill us in on how the quarters ahead could look like with regards to these.
So, first, I think we need to look at the quarter that went by. If you were to look at our business in two components, which is services and products, the services business has increased by about 3.5%. As far as the product business is concerned, it is seasonal, so I don't think it is right to look at it on a quarter-to-quarter basis. We should be looking at the product business on an annual basis. That is as far as the quarter that has gone by. As we have stated, our focus has been to improve our operational efficiency and to bring rigor in our operations, which is what we are currently working on. We believe that the quarters ahead should show some growth, I don't think we will see a dip in the incomes going ahead.
Okay, so let me then ask you about how is segmental demand looking at the start of this quarter too, because if I'm not wrong, and as has been stated as well, you've taken several steps to bring the business back on track. Has deal flow picked up? What are the client conversations looking like? Can it actually go up further in the quarters ahead?
Okay, so our business has engineering services to it, it has business IT and it has products. So as far as engineering services are concerned, our growth has been very good, and I believe that through the year we will do well. As far as the business IT is concerned, the traction is actually in digital technologies and some aspects of the work that we are doing in SAP and in JD Edwards. That traction continues. We are also seeing some traction in AMS services as well as the newly introduced IMS portfolio. And the third part I said is the products and platform. So I believe that on the whole there is good upward tick in terms of traction.
Ravi, hi, morning. Geographically, you've grown about 7% when it comes to the US, which is in line with your yearly trend, but the traction in Europe is still a miss. Also, 18 to 19% of your revenue comes from the energy and utility verticals, which has been the worst over there. And what about SAP and Oracle? Because they're poised to improve as per your expectations. If you could give color on all these.
Yeah, okay. So we work in the energy vertical, which is on the area of exploration. And that vertical has been a bit volatile, but we are striking new deals there. We work in utilities, and quite a bit of the utilities is related to their basic operations. We also have some engineering solutions in that area. And during this quarter, if you see, we got some good traction in that area. So this is as far as our energy and utilities vertical is concerned. As far as Europe is concerned, our services revenue, especially on the engineering side, has actually gone up, but our products revenue has not picked up as much. So, and we believe that, and in Europe, our engineering services is a large part where we continue to see the traction. Our engineering services are more related to automotive electronics and which are more related to the new features that are coming in the cars, whether it is in infotainment or whether it's in powertrain or whether it is in safety, security, etc. And they are good traction areas. Quarter after quarter, we are seeing good growth in that area. It's also an area where we have actually acquired some very good name. We have technologies, we have IPs in some areas, and I think the market is rewarding us for that.
But what about products in Europe? I mean, since you're mentioning about how Europe has turned out, you did mention that products, while a small piece, has not still shown traction. Can it show traction quarter 2, quarter 3?
Yes, it will. It will. The part of products which is far more seasonal than anything else is relating to the intelligent transport systems, which is largely related to the Indian market. So if you look at the products traction in Europe, it's relatively little bit only from the ITS side. So we don't expect much change there.
Okay, so, Ravi, just adjusting for your Q4 one-off provisions, then your EBITDA margins have improved by 110 basis points on a sequential basis. Other than cost control, what else has led to this, and what levers are you tightening with your admitted focus on improving profitability from here onwards?
So, the levers are, of course, how do we look at which contracts we accept, which customers we work for, how do we track the proper operations during the life of the project. The second lever is, of course, how do we manage our people, how do we manage our pyramid, how do we have the proper mix between the fresher hire and the lateral hires and all these areas. The third lever is, of course, automation and productivity tools. So we have been working on all these areas. I wouldn't say that all the benefits of this have come in yet. And, we believe that the true benefits of this should come in by Q3. But we are still doing some work on that. We have some way to go.
Glad you mentioned Q3, because I was about to ask you about whether Q2 will have a bit of a disappointment on the margins because of the deferred wage hikes.
Yes, definitely Q2 would have an impact on the wage hike. But I believe that, our productivity improvement measures plus our growth should be able to counter that to a large extent. So we have to see how it pans out.
Okay. Now, Ravi, admittedly, there is a bit of a soft patch that you guys had entered into, at least the market believes so, and it showed in the stock price reaction as well. Your commentary in this quarter, at least when you're speaking to me, seems to be very positive and optimistic as well. Am I to assume that you are over that hump, or will the year continue to be challenging and maybe the bigger green shoots will only be visible in FY17?
The way I would look at it is that what happened to the stock was A, the result of some of our own performance problems in Q4, and B, a whole bunch of rumors. And I wouldn't like to comment on the rumors. I don't know how they get generated and what impact they have. But if you were to look at our performance per se, I'm sure quarter after quarter our performance will improve.
So here's the deal really. This is the clincher really as far as this interview goes. Analysts believe that FY16 will be a soft year for you. Are you saying that is wrong?
Okay, so what I'm saying is that as of now, our focus is on improving our productivity and our efficiency. That is something that we are very much committed for. And that we will deliver on, that I am very sure about.
How would that translate in terms of numbers, Ravi? Even this quarter, yes, the stock is doing very well. Your EBITDA margins and PAT numbers were good. Revenue could have been a bit better. Do these parameters improve in numbers terms for other quarters of FY16?
We believe that over the years they will improve in numbers terms.
In FY16 as well?
Yes, that is true. Quarter on quarter, they should improve.
Okay, great. So good chatting with you today. Thanks so much, and all the best. You've exhibited a lot of confidence. I'm sure it'll translate in numbers as well. Thanks for joining in today.
Thank you. Thank you.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.